is Griffin.
My tummy hurts. Pretty good, right now. What is going on, guys? Nick with Off the Chart Trading. If there's anybody still alive out there, then hopefully this video will be helpful. I was just looking at Netflix, freaking dropping $100 after hours. That's just crazy. And I was looking to see, like, when's the last time, like, it'll probably open up around 400, maybe even a little less, and just trying to, eyeball when's the last time it was down there. And sure enough, when I was looking at it, I mean, this is on a weekly chart. I was initially on my phone looking at a monthly chart. I guess you could say literally right after March lows. I mean, you're talking the first couple of weeks of April was the last time. I mean, I guess you could say that week it dropped down to about 400, bounced off, but basically coming up on almost 2 years ago was the last time that Netflix is gonna be that low. Granted, obviously it could maybe catch a bid in the morning, but all it seems to be doing is bleeding. And it's, what time is it? 7:16 right now, so still about 45 minutes left. But at this rate, I don't think it's going to catch much buying. So just crazy to think it's going to open up down there. And then you have to wonder, what does that mean for not only the streaming plays, but like a Facebook or an Amazon or Google. A lot of the FANG names will typically trade together. Honestly, I have not looked, and I just sat down like 5 minutes ago, turned on my computer, and just hit play, and here we are. So I honestly haven't looked at any of this stuff prior, but let me see. I was just gonna check to see Facebook. Yeah, Facebook down a few dollars after hours. I think Disney was getting hit too, mainly off the whole streaming thing. Disney starts with a D. There we go. Yeah, Disney down, geez, like $5 after hours. So I mean, it's not looking good even for the big ones, and that's been the biggest disconnect. And let's just jump into the main thing. And I talked about this, I think, was it last week's video, the week before, like, that shift. Talked about the month. I mean, that was on Tuesday, the monthly, but kind of showing how this has been, unfolding over the last couple weeks now. And, this was great last week that we hit the 200, or not the 200. We hit the 34 on the weekly, bounced up and got above the 8, almost like what the market typically does. And then that was short-lived. And then here we are today, breaking below the 200, and quite forcefully. I mean, the lowest tick of the day was, I think, like negative 15, what was it? Negative 1547. I honestly cannot remember the last time I saw one. Geez, even 1400, let alone almost 1600 on the ticks. I have to I mean, obviously it might have happened over the last 2 years, but I want to say March lows, I think, was the last time in 2020 was the last time I've seen that type of extreme tick reading. And it got real ugly. I mean, to not only have a nice pop today from the 200, and then, I think, I don't know off the top of my head how much we have. I want to say about 150 on the NQ. Everything's slowly finding its footing. And not only to give up it, but then bleed like crazy into the close. I mean, it was very aggressive. We caught a little bit of it on the short side on futures. I didn't make it crazy. I think I made like $275 or whatever it was. And my rule of thumb when it comes to my futures account, since it's smaller, is if I can make 250, $300 or whatever off of one or two trades, that's good for me. It stops me from over trading. It stops me from spending a lot in commissions. So I typically just shut it down. But geez, if I even with the micro, I mean, we traded minis initially and then micros just for fun in the room. And even off the micros, I made like 60, $70 fairly quick, which is crazy considering they need to move a decent amount for you to actually make a decent profit. And that was before the crazy ticks and everything happened. So, I mean, it's not looking good. I mentioned this, I think, either end of November, December, as far as this kind of was a known event that obviously that they would be tapering this year, and that we would see rate increases. So to me, it's not too surprising in the sense of like that was kind of known. So I'm a little shocked that the market's reacting, I guess, because it goes from, living in la la land to like, oh shoot, this is actually right around the corner. Maybe it's time to reevaluate some of these tech names and, how crazy. I mean, let's just look. I mean, look at that. Look at that action. I mean, look, for a couple years, decent growth, down a little bit, decent growth, and then just steroids. So there's a lot of unfilled, 12,000, 10,000. I don't think we're going to come down this far. I was thinking probably what level was it that I was looking at? It was on the 21 on the monthly chart. That's kind of, if this really did get ugly, that's where I was kind of eyeballing. And obviously this number is going to change every day by a little, but was at 13,420. If this, and we're not that far away. I mean, we've already lost almost 2,000 points or so, almost exactly that, or a little more than that now from the high. So I mean, realistically, what's another 1,500 or so? Not even. So that might be more realistic as we get closer to it. But it broke its 200. I mean, it bounced off it last night, and then today just into the close, and then obviously we're down even more here after hours. So it's not looking good. I think we're going to see a lot of chop. Whether this is just, I don't want to say one and done, but it gets really, really ugly, like a margin call Monday or something. And if tomorrow's just as bad, I could see Monday basically being a bloodbath. Now, I'm not going to be in the room. I'm having a little mini vacation, so I'll be gone Friday to Monday. But, as we get there in the afternoon, if I see that we're down a few hundred points, I'm just going to assume there's going to be a margin call Monday, and I'll probably just put some puts on as a hedge into Monday or that Wednesday, probably the Qs at this rate, because, even after hours, it's definitely the one getting hit the hardest. I didn't even look at the TNX today. Nothing too crazy. I mean, it's still elevated above the 1833, but it didn't take out yesterday's highs. So nothing too crazy. It didn't get up to like 2 or whatever, but I don't know. This is, like we talked about it, it's just not looking good. And who knows where the bottom is? Maybe it's somewhere down here, or maybe it's that level I talked about on the monthly chart, because the weekly, I talked about it. It's the first red candle we're seeing since March lows. So first time we're breaking below the 34, and that's, granted, it could still close above it tomorrow. It's just highly unlikely at this point that it's going to break above 15,181. Anyway, ES looks a little better, but it's definitely being dragged down. At the minimum, I think ES hits its 200. I think that would make the most sense. NQ's kind of leading that. So right now, I'm just going to round up and say 44.23. When we were looking at the ATR chart earlier, the daily 3 ATR on the ES was also almost at exact same level. I want to say it was 44.22 or 44.23 almost. So you have the 3 ATR and the 200. So when I look, I'm not a super technical trader, but when I look at different reference points, different indicators, different time frames, and I see a certain level that could be resistance or support and it's overlapped, I put a little more emphasis. I put a little more, like, maybe it's stronger. So we'll have to see how it is at this rate. It might happen overnight that we end up hitting the 200 on the ES. And I'll be curious to see how it reacts. The fact that the NQ blew through. I mean, the first attempt it hit almost to the T, bounced off, and then we did have a decent rally, and then towards the end of the day that completely fizzled out, and then got pretty bad pretty quick. So ES maybe the same concept, but that would be the next level. I think would probably make sense for it to touch. So I mean, at this rate, what's another 30 points or so? So we'll just have to see how that is into tomorrow. Now, one thing I was talking about in the room is, I use the Bollinger Bands on a daily as a, there's no true level of overbought, oversold, but when you have 3 days outside the Bollinger Bands, I typically say there's a 20% chance and a 40% chance and a 60% chance that the following candle will be within it. That does not mean that it magically rebounds. It just says it's either going to be sideways to potentially up, or vice versa. If it's up, then, on that third, fourth, fifth day, there's a high probability that it'll either be sideways so it gets back into it, or ends up coming back in a little bit. So maybe that's tomorrow. Maybe we see even lower prices tomorrow. We do end up hitting that 200 or something equivalent, and then bouncing above that. If not, if it's like the NQ breaking out, then it's going to be tough. Maybe come down into these levels like 40. What is that? 42. What did I say? 4,300 area. I like to try to find support and mix psychological, round numbers and so forth. So there you go. Shifting to red, breaking below the 34 as we speak. Granted, it's only by like 2 or 3 ticks, but now we look at this, and when's the ES last candle on the ES that's been red? I mean, you're talking once again March lows from coming up on almost 2 years ago. So it's definitely more significant than say here or any of these other levels that we've seen, because this is it, this is it, this is it, this is the big selling, this is it, this has to be it, and here we are with a little more, confirmation that this is probably going to be different this time. And the reason I think that is, if all eyes are on the Fed, and I've been talking about this cheese now for, I think, ever since March lows, was that, the Fed is going to be, the markets don't care about COVID. Why? Because they're typically forward looking. And I'm not going to say they don't care, but that's what dropped us. Then the Fed injecting money and doing all that other stuff is what got us ultimately higher. So, they rode that free money for almost 2 years. And then here we are, and there's no more cookies in the cookie jar. So what happens now? And I think we're at that inflection point. So I personally think this is a little overreaction. This type of action makes me think that people are pricing in that they're going to come out with a 0.5, and then they'll probably do another 0.5 in like the summertime, and then towards the end of the year maybe another 0.5 rather than just doing 0.25. Obviously, the Fed looks at how the markets are reacting and all that type of stuff, so they're almost forcing them to reconsider if they were going to do 0.5. So I would think, as long as inflation numbers aren't going rampant or crazy going into March, that we would probably see a 0.25. And I think that will be ultimately one of the more bullish things that will probably get us back up. I don't know about all-time highs again, but at least higher than what we're at right now. Even more if we do end up dropping to 4,300 or 4,300 or 4,200. Obviously the further we come down, you could have a big pop and still not get back up to 4,800. But I think that's going to be the next big catalyst, is whatever the Fed decides. And since that's not till March, March, April time, then there's nothing really keeping us up. I mean, earnings would make the most sense. But so far it isn't the same numbers as 2020 or 2021. I mean, look, like I said, we started with Netflix. It's down 20%. That's a big move for a $500 stock. So, and who knows where it will open up tomorrow. So when you see all that type of stuff and the growth isn't there, which to me is common sense. Like, who doesn't have Netflix by now? You've either had it and don't want it anymore, or you have it. Like, I don't think that rapid growth, especially with them increasing prices, I think that might offset a lot of that. Because I know probably 90% of people are not going to cancel Netflix over a $2 raise or increase, even though they seem to do this almost yearly now. But I'm saying that's not a good start. Everybody looks at the FANG names, everybody looks at the big tech names, and that's not a good start. So if you have Apple barely beating, or just in line, the word in line is the equivalent of having a horrible quarter right now. So we'll just have to see. I mean, I haven't really looked at Apple specifically, but yeah, so same thing, breaking below its 50, and it's kind of following the overall market now. Since it's such a heavily weighted name, it's kind of one and the same. So goes Apple, so goes the market. And that low compression squeeze firing short. It doesn't actually look that bad. It's still above its 8 by a good amount, $10 there. So it's holding up quite well. And obviously it depends on what you own. If biggest position in your account's Apple, then you're looking pretty decent right now. You don't feel it, but if you're in some of the growth names that I'm in, geez, like, I feel bad for the people that are in these names and they're down 80% in a matter of a year. That's crazy. So it really all depends on what you own. But I think, was it 2/3 of, so you got what, 66%, give or take, 65 to 70% of the stocks in the NQ are in bear market or in some type of correction territory right now. So that's kind of alarming, but I always go back to, I'm not a big fan of 10 stocks controlling 30% of the market, and then you add another 5, and then it's 1/3 of the market, and then this, and then half of the market. I'm just not a fan of that, but obviously it is what it is. But it kind of shows some significant weakness on a lot of these underlying stocks that doesn't, not household names like Apple and Microsoft I haven't looked at either. It looks like it's going to come down to its 200 at this rate. Earnings obviously will be make or break. I'm sure most of the big ones will beat, but I don't know if it's going to be enough to shake off, once again, the increases. That's why I keep circling back to the Fed's decision. So when I say that, these stocks could do something like this until we get direction. So it might be bumpy till around here or even April. So, you need to make sure you're buckled up and have a plan. But I'll show the profile real quick. Like I said, I didn't really do much today personally. One thing I did do was, actually funny enough, did participate in the markets on the way up. Let me switch to that. Lucid. Actually, Lucid up after hours. That's funny. Lucid's actually done really well considering everything going on, even though I'm not a big fan of that 821.34 cross, that white arrow down. But all things considered, that companies that are not profitable are getting hit the hardest. The fact that this is up, a good amount, I'm quite impressed that it's held up so well. And that's what you get when, almost 80% of the company is institutionally owned. Shoot, what was I going to look at? Oh yeah, SPY. And then switch screens because I just want to show up, this might be good for some of you guys that struggle with this. And today was the perfect example of why you do this type of thing. Let me try to, I'm going to get the screen right and then I'll switch over to it. Come on now. All right, let me see. It is, what screen would that be considered to? Yeah. All right, so I made a post. I don't remember what time. That's probably around 10 o'clock or so. I mean, we were already up like 30, 40 points, and it looked like it was continuing today. Fairly good buying. And, I mentioned, after the markets are typically hit, you'll have some of the best days during a bear market because of short covering, and it causes more short covering, and then people put fire to the, people's feet that are short algos and people, high frequency traders, and even us will buy calls and just keep pushing it up. And I made a comment about that obviously as price goes higher, it's kind of common sense that, when it gets to here, it's causing more people short. And when it gets to here, it causes more people short. And I made a comment that we could, end up finishing up the day triple digits. We've had triple digits on the way down almost, so why not on the way up? However, I did follow up with that saying I don't personally trust it right now, in the sense that you don't want to get caught long. Okay, this is it. We can buy the dip now and everyone's going to live happily ever after. You don't want to get caught up in that scenario. So I did end up buying some SPY calls, nothing too crazy. And I knew it would be a day trade. I can't remember exactly where I got in. I think it was around 10 o'clock this morning, maybe 9:45, somewhere in here. But the point I want to make, and this is on a 2-minute chart, was once I was up, I think maybe at the most 700. So not a crazy trade, but for a day trade, pretty decent. And I ended up putting a stop, I think somewhere around here. It's probably around 11 o'clock or so. I can cross-reference in Slack, but I just wanted to show it on the chart, is I put a stop in. Why? Because, it's a day trade. Who knows where the market's going to be, all that good stuff. And I ended up getting stopped out, pulled back kind of right over here. And I locked in, I think, 520, 510, whatever it was. The amounts, irrelevant. You could have a 1 lot made $50 or, you have a 10 lot like me and you made 500. Cool, whatever. Trade. And then look what happens. Just utter, destruction straight down. I can't even, it doesn't even do it justice unless I squeeze in, but because all the other indicators, it doesn't look that great. But boom, that was a perfect exit. Granted, I was calling that it could continue to go higher because in markets that have been beat up for 3, 4, 5 days a week, 2 weeks straight, you eventually get those 1 days. If you guys remember March, we had some Dow was up 2,000 points one day because of that. ES up 200 points. You will get days like that. So who's to say it couldn't have been today? But just because something might happen doesn't mean you trade based off of that. You always have to assume this is going to happen. You're long, everything looks amazing, and then this happens. So I got stopped out. I made my 500, whatever it was. And then I did catch a little of this on the short side on futures. So I made a little there and made a little there. So my point is, you don't always have to participate, but when you do, you can make a quick day trade. Between the two, between the futures and that, I probably made about $800 today. Depending on, that might be amazing, or that I made that in 10 minutes, but it's all relative. But my point is, I'm happy with that. I'm content with making that today, considering everything else going on. Because when it comes to my portfolio alone, 95% of what I own right now is stuff that I think will be big in 5 years, 10 years, and so forth. And I've talked about that having a plan is incredibly important, because if you don't, when price doesn't go your way, you're quick to throw in the towel because you're assuming that you're wrong, or that, and I always like to say the market's right regardless, because it's going to do whatever it's going to do. And that's why there's an ego check and all that kind of stuff. But if you have like myself, a 5-year plan, then you can't let 2 weeks of price action, shake you out of a position. Now let me switch. Was that 5, right? Yeah. Just to show you guys. And like I said, there wasn't, I was going to talk about the profile, but there's honestly nothing really to talk about. The price we're at right now, I don't really have any reference points. We, ended up having a solid day the first 2 or 3 hours of the day, and then completely bloodbath. We took out yesterday's lows, and I don't have anything. I don't have any reference points below because we haven't seen these prices in over a month. The prior week high is I don't even know where that would have been from because that's definitely not from last week. But I have one level right now which is 44.55, and that's basically it. So there's really nothing to show about that. But the one thing I wanted to show, and obviously if you guys are members, you're aware of this and how I look at stuff. But I'm just going to look at DM because that one's been incredibly beat up. Now, for myself, from it being $35 a share to now $3.83, and every time I give this example, that price on the right just keeps getting lower and lower. But my conviction in this stock has not changed from $35 to $3. Yes, if I own shares at $35, it's going to take many years probably to even break even. But my average is like $7 in the stock, or $6.86 I think now, $6.80 something. So even though I'm almost down now 50%, give or take, I have a decent average. When it comes to what I think this company will do in the future, I'm not really too focused on this. Does this suck? Absolutely. Because you buy something, you bought it today at $3.85, you want it at $4 tomorrow, and then you want it at $5 and then $10, and that's not how the markets work. And I hate to break it to some of you guys that maybe have only been trading 2 years. You got your stimmy checks and you found out about Reddit and you made a killing and then lost all of it, or you've been slowly bleeding out thinking you're invincible. This is what the markets do. It's not always going to be just straight up and buy the dip always works. So you need to have a plan. Because honestly, if somebody bought this at 5 and it's out at 3, or they bought it at 10 and it's at 3 something, you end up running into, oh man, is this a bad stock? It's a bad company. This has to suck. I have to go on YouTube. I have to go on Reddit. I have to go on Facebook. I have to find out what's going on with the stock. Well, then when you look at the conference call, or you look at certain things and nothing has really changed negative. Oh, they bought X1. They did this. They did that. Why would you sell? Just because you're down? How are you going to say you have a 5-year outlook and then be out 2 days later? Now, granted, if your risk parameters are saying I can't lose more than 10% in a position and that's why I'm out, that's fine. You can always revisit it. But nothing has changed, and I started buying the stock when it was 15, and then averaged down, and then averaged down, and then averaged down, and now my average is like 685. In the grand scheme of things, if this stock went to $200 in 5 years, do you really think it matters if your average was $3 or $6? No. In the short term, yeah, it sucks. And the reason there's nothing specific about DM. I just want to, any of these stocks that you look at, there's some that are even more aggressively down. Look at this. I call it Blinky Lights, Berkeley Lights. Look at that. $113, going into 2020. And now it's a $9 stock. That's crazy. That's a massive thing. Granted, my average isn't 113, and this one it's like 14 or something. So I'm down on this one, but I just recently started buying it once it got down to about 16 or so, and I got my average down to 14. I like the technology, and I could see it being big in the future. And I also look, like anything in life, if something was $113, I went to Best Buy and they were selling something for $113, and I liked it, and nothing has changed other than the price. Well, then that's a screaming buy. I'm not saying this can't be a $5 stock, and I'm not saying they can't go out of business or whatever. Obviously, I'm using extremes because these are growth stocks, but I liked AMD at $2. I liked Tesla at $22 pre-split. There's a lot of companies that I've liked over the years that I could see being the future. And if I held any of those more than just a few, those are mostly, long swings and trades and stuff like that. I got out of Tesla because it didn't move for 2 years. I got out of AMD because I was watching something about, there's only going to be a handful of chip and it'd probably be Intel and stuff like that in the stock. It was down. And that's when I was newer. This is going back, 9 years ago, 8 years ago, 10 years ago. But if I held all the things I had conviction in back then, I could have literally had my $15,000 account when I was like 22 or 21 or whatever I was. If I held Tesla, Nvidia, AMD, and some of these other ones I had, I'd be worth like $600,000-$700,000. And it's not really hindsight because it's not going back in a time machine and buying Apple. No, I own those companies at those specific prices and said, I think these are the future. But I got shaken at Facebook at $38 and all this other stuff. I got shaken out of it because of, the talking heads on TV. You see the price continue to drop, and you're assuming that the people that are bashing it are right and that you were wrong, and you get out. And then look at, AMD $120 something, Nvidia, geez, before the spread going to 1,000, and Tesla, that's the equivalent of being what, $5,000 stock right now or whatever it would have been, 3,000, whatever craziness. So you get what I'm saying though. If you have conviction and you could see something potential, doesn't mean you're going to be right. That's why I don't have all my money in one specific stock. But if this is 2% of my account, the other one's maybe 5 or 8% of my account, I can manage if those don't do well. But You find the one that you like and have conviction and can hold it. That's great. So what would somebody look at this, and say, oh, this is a buying opportunity? That is literally trading 101, or it doesn't matter what you're in. You want to buy low and sell high. Obviously, you don't know where the bottom is. You don't know where the top is. Who knows where the stock will be? It could get amazing news and be a $30 stock in 3 weeks. We don't know. But what I do know is I like this one, followed it, still didn't want to buy any of it because of its downtrend. And once it got down to a level that I was comfortable with, then I started buying it. And then the CEO is going to be transferred, and then something else, and then boom, it's a $9 stock. But overall, the technology is good. Same thing with DM. I think 3D printing is going to be the future. And if you look at a lot of these stocks, they've been beat down. And it's all hindsight. Obviously, if I can go back in time, I wouldn't start buying it till $3.83. And maybe that's $3.75 tomorrow. Who knows? But my point is when you find a stock you like and you're willing to hold it, then stick with it. There's nothing wrong with having losses. Like I'm down, like all my favorite growth stocks, I'm down 30, 40, 50%. But it sucks to see my P&L down, like my account down 3 to 5%, what it feels like almost every single day. Nothing has changed. I haven't wavered. Nothing has changed with these companies other than their earnings in the sense of revenue growing. Everything that I'm focused on for these is they're doing the right thing. So it's the equivalent of, Amazon going from $100 to $6. I'm not going to sell it because I believe in it. So the reason I'm talking about this is I have a plan. My plan is to hold for 5 or 10 years because there's specific technologies and specific sectors that I like and I think is going to be the future. I could be wrong. Maybe EVs aren't the future. Maybe the charging plays aren't the future. Maybe all these 3D plays, because it's not just this one. It's MarketForge. I say MarketForge, but it's MarkForge. I don't know, probably because of the stock market. I'm always saying MarketForge, but MarkForge, same thing. Not as aggressively down, but from a highs of 11 to 456. My average on this one's like $6 or whatever the case may be. So, there's a lot of them. VLD is another 3D printing one. More than cut in half. There's a few of them. Think of RDW space. Like I like space, anything that I find interesting and stuff. And there's a company that backs it up. This one hit all-time lows a couple days ago. This one, I think my average is even higher. I think it's like $9. So yeah, I'm down, 50% on this one, but nothing has changed since I started buying it around $10 when it was a SPAC all the way over here. These companies have not been trading that long. So yeah, they're getting beat up. So everyone's like, oh, this must be a bad company. Green good, red bad. And then you fast forward time 5 years and it's like, well, that was the obvious pick. Why didn't anybody buy that back then? And I don't know which 3D printing play is going to work or any of these other, you got Blink, which I called it $1.80 to buy and hold. And that's another thing. That's another reason why I've, making sure that I stick with these ideas. Even we had the room. A year and a half ago, Blink was $1.80, and I said, this if you're going to play the the long game in EV charging, this is a good one to buy and hold. I had shares. I think I had like 1,500 shares with an average of I had an average about $1 or $2 or whatever, and I sold at 180 in March lows, because I was just like, what? Who knows? I was just trying to preserve capital and stuff, but I was right. You hold it, boom. You could have sold it in the 50s, 60s, whatever. You could still be in it and be up 2,000%. So my point is, stick with the ones you like. There's a lot of these. EVgo, probably arguably my favorite one, that's been beat up as well. ChargePoint, all of these. Nothing has changed with these companies, but they're being punished because they don't make money right now in a potentially high interest rate environment. How long will that last? Who knows? All I know is I like the stock. I don't want to pay $50, but I started nibbling on shares for the first time in this one at I think 15. I think my average is like $15 in this one. So yeah, it's 14 or whatever. And, it's fairly close. I think 52-week lows would have been, when it was a SPAC or whatever. So, you're seeing levels before it even really started moving up. So I don't mind buying at this. Matterport is another one. I know I'm going on a tangent with this stuff, but my point is there's a lot of stocks that I think will be big in the future that are getting beat up. And no one wants to, when this was, going crazy because of the metaverse and all that stuff, and it hit the $37, you couldn't get enough of it. And then when you could buy it at, what is that, 67, 80, 70% off, whatever it is, no one wants to touch it. I just find that, you got to step back sometimes and just reevaluate how you look at the markets and not focus on your daily P&L or focus on what TV says. Kramer's like, oh, if it doesn't make money, you got to sell it. No, the guy I'm the Ethereum guy. And then 2 days later, he's like, I wouldn't touch crypto. Like, you can't let people, on TV and Facebook and YouTube and all this stuff change your mind. And me being, another talking head in a sense. I'm just giving you what I'm personally doing And what I see is if a stock goes up to $37 because it's potentially a metaverse play, and it does other stuff that's good. The 3D. I mean, when you do a 3D tour of a house, they're using Matterport stuff. So I started buying this, I think at 14 or 13. No, I think I started buying at 15 or 14. Regardless, in my head, I'm getting a discount of over 60% or so when I started buying. I nibbled on it yesterday. I didn't buy any today. Because honestly, with the way the market's going, this could be a $10 stock, this could be an $8 stock. So you don't want to go full position right here, because when something like this happens, it's going to take a lot longer for it to come back and for you to turn a profit. So I'm invested in this company now. I'm glad this is happening. This is what you want to happen. But my point is, I'm trying to take advantage of what is going on, what the market conditions are right now. Now you could short, and I prefer doing that intraday, because this market's taught me that when you do have trends and you do have breaks and you do have this and you're setting up, you're like on your marks, get set, go, the opposite happens. So I don't want to get caught shorting and then the next day we're up 200 points. So I'd rather stick to that intraday. That's what I want to personally do. And in the meantime, I'm going to find companies that I like, that I think will be big in, it doesn't have to necessarily be 5 years. It could be 2 years or whatever. But in just general stuff to focus on the future. And that's not Apple, that's not Amazon. I'm not saying those are bad companies. It's just trying to find the next ones. And I'm happy that all this is dropping. And obviously I don't know the bottoms or the tops in any of these plays. And yeah, my account's taking a hit, but I'm sticking to the initial plan and looking at this as a gift. And that all comes down to the psychology of trading, and is ultimately the most important thing. So I know some people are probably struggling out there when it comes to these market conditions. I'll be the first to say it could get a lot worse. And, I'm in there, I'm in the ground too, and it's not easy, but you always have to go back to what is your plan. Well, my plan is to buy certain stocks. I shifted into, liking a lot of these innovation technologies, a lot of, say ARK or Cathie Wood type stocks. Not all of them, but some of the ideas behind some of the names I do agree with. So what have I been doing? I've been nibbling on them. And then averaging down. So yeah, who cares if I'm down 30% if in 5 years I could be up 300%? Well, you don't know that. Yeah, you don't know where Apple's going to be. You don't know where Netflix is going to be. You don't know where any of these. I guarantee 2 days ago, if I told people, oh yeah, your Netflix position is going to be down 25% or so the next day for earnings, oh man, that's a big hit. You just don't know. That could have been the high in Netflix, and that's it. So when these companies are down 60, 70, 80%, and I could see them being big in the future, they're either a potential buyout target, or they're going to organically grow themselves and be the next disruptor, the next, Apple and Tesla and all this other stuff. So, I don't know. I've always had a eye for that type of stuff, and this time I'm trying to follow through. So I'm looking at this as a gift, and to be able to buy stuff at a relatively good price and hold it for a longer period of time. Is my account taking a hit? Yeah, but who cares? My account took a little bit of a hit in March lows, and then it rebounded. I doubled it. Going into the end of March or end of 2020. So you can go from being at your lows to your highs relatively quick as long as you have a plan. So don't get discouraged. Stick to the plan. If you don't have a plan, then just step back. You don't always have to trade. You don't have to be in these conditions. It's not easy, and especially when things are down for more than one day. People are like, what's going on? I never saw this on Reddit. You just have to be aware these are the conditions. And I've talked about it before. I don't know if this is targeted at a lot of quote unquote meme stocks or certain stocks, like a lot of the AMC. I haven't looked at AMC today, but I'm sure that's probably getting crushed. Yeah, $18. Geez, I think this is a targeted attack, because if the Fed's been very clear of what they're doing, I don't think it's that 100%. I think it's to shake out a lot of retail and either give in, throw in the towel, or this is too hard for me, I'll have somebody else manage my money. You know what I mean? Like that type of mindset, because a lot of these stocks are getting crushed, especially depending on where you bought. I mean, you're done. Like GameStop at $400 something, you're still holding shares, you're done. It's best to move on. The stock is down quite a lot, and it's just bleeding with everything else. So my point is, when you see these types of moves and people get used to this type of action, and then they realize that's not how the markets work, there's a few, crossroads, I call them, inflection points when you're trading, that, you have to realize that market conditions change. I'm normally a swing trader with options. I'm not going long, and I'm definitely not just going to short random things. I'm going to play it out. So what am I doing? I'm intraday trading setups, quick setups that I see, getting some pennies and dimes off the floor and just hiding out, trying to survive. It's during a Category 5 hurricane outside. My goal is to survive and just live to fight another day. So that's my plan. And hey, oh wow, I really like this stock at this price. It's down 80%. Nothing has changed with the company since the drop. I'm going to buy it. Oh, look, tomorrow it's down even more. I'm going to buy it. Nibbling 20 shares here, 25 shares there. That's my plan. Could it be painful for the next 6 months? Absolutely. But I already signed up for that. I can't have a 5-year outlook and then 2 weeks into the year be like, my tummy hurts. I can't do this. I'm going to sell everything, lose, 30-40% of my account, whatever it is. And then just, refocus on stuff, because hindsight's going to be like, well, look at Matterport at $40. Look at DM at $20. Look at all these stocks that you sold at the lows and now they're higher. I guarantee everybody listening has had that happen to them. So anyway, not to go on a tangent, I just want to say that it's not easy, and you need to have a plan. If you don't have a plan, you just have to, be aware of that. Come into the room. If you're not a member, try us out. Just so I think more than ever, it's good to be a part of a group, because I couldn't imagine doing this by myself, especially during the bleeding, and having no clear direction and not being around a group of people that, obviously care about my interests and try to, help me the most I can. That's why I'm appreciative of our group. And what it does is, we kind of joke about it, like, oh man, how much are we getting down? We're going to be living under a bridge, stuff like that. So try to make the most of the situation, but at least have a plan. Brett did really well. He had IWM puts into yesterday, held them through that massive move up. I give him kudos, because I probably would mount at the beginning of the day seeing that the reversal, and then he cashed out and made, I think, like $1,500, $2,000, off of a daily swing in a sense. So there's plays out there, and you can either focus on some of my long-term ideas, because guarantee they're cheaper than when I started buying them. So if I loved it at 10, you might love it at 4. So, you can get a list online from that. We have that on the site for members, or be in the room when you can and take advantage. I shared that SPY trade. If anybody played it I gave kind of walkthrough, oh, it's up 30%, and gave hey, I put a stop in, this is the stop. People did the same thing, boom. Maybe they didn't do a 10 lot, but, maybe covered the cost of the room on that one trade. And that was the trade of the day for them. And they don't feel the need to take any more trades because of how crazy this market is right now. Like I said, your number one goal as a trader is to preserve your capital. And once again, try to live to fight another day. I literally have that as a mantra on a plaque next to me with a bull and a bear in this. And it says, live to fight another day, because that's ultimately your goal as a trader, is to be able to be here tomorrow and Monday and Tuesday and so forth. And make sure you're not blowing up your account or losing 50-60% in a day or two. Like, you don't want that to happen. So anyway, we'll just have to see what the next couple days, couple weeks brings. But I'm expecting chop, and I don't think it's going to go away for a little while until we get clear direction. So whether the Fed, whether specifically Powell either changes his tune, or the inflation data, or whatever the case may be, the sooner that happens, the more I think the markets will stop having a taper tantrum, and we either level out or potentially go higher from these levels. So we'll just have to say, but without clear direction, FUD can, there could be clouds everywhere. And especially with retail traders and algos and pushing all this stuff down, it can get a lot worse. Like I said, I wouldn't be surprised if we come down to the 21 on the monthly chart. We'll just have to see how it goes. But like I said, make sure you have a plan. If you don't have a plan, it's completely fine to say you don't have one. Step back and ask questions. Once again, join us. How do I have a plan? What should I do with this? Okay, cool. You don't have time to day trade, then do small swings. I normally do a 10 lot. Great. You're going to do a 2 lot because of the volatility. Bounce off ideas. I have people messaging me all day long about different stuff. So obviously we're here to help. And if you want to, call off the chart trading your home, then by all means, come join us and check us out. But like I said, longer video, almost 40 minutes. Geez, I did not mean to speak that long, but I genuinely care, and I don't want people to get chopped and killed in these types of markets, because like I said, it's easy on the way up, but as soon as you start doing this, people, they're invincible, they're the best. And what's the saying? Everybody's a genius in a bull market. When stuff like this happens, and it happens in, it could be a year or 2, 5 years, who knows, but eventually you get volatility one way, either up or down. And the VIX, I'm just looking at that corner of my eye, over 25 again. So you just need to have a plan, follow it. And if you don't have a plan, step back and just realize the market conditions have changed, and how are you going to change with it? That's one thing. And I'll end it on that. This reminds me of 2018. I lost my ass in 2018. October, I think it was. I was doing really good. One of my first profitable years. Everything was kind of working out. You know, I was in the groove of things. And then the whole same thing, Powell and friends, kind of screwing with Fed, the rates, and I think trade war back then, if that's around the same time. In 2018, I ended up giving up almost all of my gains. I think probably 80 or 90% of my gains in a matter of 3 weeks because buy the dip, average down on these calls that expire in a month did not work. We literally had, you know, some crazy action going into 2018. It's probably back here, right? Yep. So very similar, red, and then just we literally had months and weeks, and then the Powell put or whatever thing was middle of January or sometime in February, whatever it was, somewhere around here. I don't think it was this year. I think it was going into the next year. I forgot what he said, but then they were going to ease up on interest rates, and then boom, off to the races. So he can do something again, have another Powell put, but if we're week 2 or week 3 of this, it could get bad. You know what I mean? Like, so just be aware that it could be another couple weeks, couple months before we get something like this to happen. And it might not happen. You just never know. But just be aware of the market condition because, this was all amazing. And I bought calls going out to here and, oh, great. We're down here. Let me buy. Oh, look, we're going back up. Oh, man, we're even lower. Let me buy here. And it's probably this week that really royally screwed me. Because like I said, it got really ugly. And, the candles don't do it justice when you're looking at this stuff. But you get basically, I mean, that's obviously what I'm looking over here, but you get the idea. This is the end of the world, and then we go to all-time highs. March COVID, that's the end of the world, and then the ES and all these other ones double almost. So anyway, I'm on a tangent, but like I said, hopefully it's helpful. I know during these times you just kind of want to have an idea. So like I said, it's best that you don't know where the market's going to be. Cash is a position. Knowing when to trade, knowing when to give it gas and when to hit the brakes is very important. And it's the same thing with the market. So anyway, hopefully it's been helpful. You guys are more than welcome to reach out to us if you need help with anything.